Aehr Test Systems is trending as investors and traders parse a complex earnings picture that blends short term financial weakness with a sharply improving long term outlook driven by AI demand. While headline numbers initially raised concerns, management commentary and reinstated guidance have shifted the conversation toward bookings momentum and future revenue visibility. Near term financial headwinds. For fiscal Q2, Aehr reported revenue of $9.9 million, down 27% year over year, reflecting ongoing softness in legacy end markets. The company also swung to a non GAAP net loss of $0.04 per share, highlighting the impact of lower volumes and an unfavorable revenue mix. Margins compressed significantly. Non GAAP gross margin fell to 29.8% compared with 45.3% a year ago. The decline was largely driven by reduced contribution from WaferPak and contactor revenue, which dropped to 35% of total sales from 64% last year. Lower system volumes further pressured profitability, amplifying the margin impact. Silicon carbide, once a core growth driver, remains very soft, with customers pushing system capacity additions into FY27 and only modest near-term WaferPak demand. Guidance reinstated, focus shifts forward. Despite the weak quarter, management reinstated guidance for the second half of FY26, helping stabilize sentiment. H2 FY26 revenue $25 to $30 million. H2 FY26 EPS minus $0.09 to minus $0.05 non-GAAP. More importantly, Aehr issued a bullish bookings outlook, forecasting $60 to $80 million in H2 FY26 bookings, well above the current revenue run rate. The majority of these bookings are expected to come from AI processor burn-in systems, reinforcing the view that revenue is lagging demand rather than demand weakening. AI momentum stealing the spotlight. The standout theme is Aehr's rapidly accelerating exposure to AI processors at both wafer and package level. Sonoma packaged part systems are seeing strong adoption, with Q3 to date orders exceeding $5.5 million, already rivaling or surpassing all of Q2. Multiple ongoing evaluations are underway with AI and data center semiconductor customers, suggesting further upside potential. Management described visibility into FY27 as very strong, driven primarily by AI workloads rather than EV or silicon demand. Investors increasingly view Aehr as a critical enabler of AI chip reliability, with burn-in and early life failure screening becoming essential as AI chips grow more powerful, expensive, and failure intolerant. Community sentiment and trading dynamics. While earlier skepticism focused on declining revenue and margin compression, sentiment has shifted decisively. The community is emphasizing bookings, evaluations, and backlog conversion rather than current quarter profitability. High short interest has reignited discussion around a potential short squeeze, especially if large AI orders are announced or bookings begin converting into revenue. Bulls argue that near-term losses are transitional, while the AI ramp sets the stage for a structurally stronger FY27. Bottom line, Aehr Test Systems is navigating a painful transition period, marked by weak silicon carbide demand and compressed margins, but the market is increasingly focused on what comes next. With guidance reinstated, bookings set to surge, and AI burn-in demand accelerating, many investors believe Aehr is laying the groundwork for a powerful inflection point, one that could redefine its role in the semiconductor testing ecosystem. In the current debate, Future AI driven growth and squeeze potential are outweighing near term financial softness, keeping AEHR firmly in the spotlight.
For Friday, the 9th of January 2026, it was quite a big day for the stock, again 16.74% ultimately with a volume of 3.387 million. It doesn't really trade a lot of shares, okay, and it's effectively a low float, 17% short interest. So yeah, it has it has the characteristics of it has the makings of it has characteristics of a stock that can break out into a squeeze. See the 50-day average. This is what is responsible for all that's been going on the stock over the last 50 trading sessions. And if you go beyond that, it might still be the sort of volume we're talking about, not up to 1 million. And this is it's not a minor stock. It's not a minor company. It's quite relevant. Quite relevant, yeah. So look at this. So all these expansions and contractions, it was done on very tiny floats, on a very tiny volumes. Yeah, so the stock has been, I think, consolidating within the longer term bullish trend. I would say since October of last year, 2025. Underlying trend underscored by its 200-day moving average sloping bullishly upwards, and the extrapolation seems to be suggesting that it might hold this trend up to Tuesday the 13th, and then after that we might see a contraction. Okay, and then that will be more of a let's just say profit taking. Then after that, the uptrend may resume, or rather the consolidation I think may resume from there. So, well, they know how they some people are benefiting from the consolidation that has been playing out. Option traders, they know they will probably be enjoying it. And but either way, even if it's breaking out to the upside, they will be benefiting from it. So yeah, some people either way they're benefiting from it, but it seems to be suggesting that this, especially the pattern that has played out since the 20th of November 2025, it seems that it's still expected to remain in place. So just consolidation, I would say, between so far between 26.32 and 19.33. Okay, yeah. So here the projections are saying, beginning from the list, we have 8.72, 11.31, 15.52, 27.73, 30.72, and 32.57. Momentum is expected to remain elevated up till even get stronger. Expected to get stronger up till Tuesday the 13th. Then after that, it's expected to begin to decay, and there's a likelihood that the stock might drop below its 10-day moving average. That moving average is rising at a pace of let's see, of rising at the pace of $1.9172 every day. Yeah, and maybe it might cross over it by the 30th of January if or if this extrapolation plays out like this. It's likely that that is what's going to happen. So let's see now. We could just quickly glance at its weekly chart to see what is going on there. On the weekly chart, high prices are expected to keep laying out all the way towards the 6th of April. Then after that, we might see a contraction. Yeah, and then the uptrend may resume from there. Projections are saying on this weekly chart 14.14, 17.09, 21.86, 46.78, 57.51, 64.18. Yeah, okay. So momentum is expected to continue to increase up till the 2nd of February. Then after that, it's expected to begin to decline. Whilst the stock continues to run up. Okay, we'll see how all of that will go. Let's see the 4-hour chart. Okay, here the extrapolation seems to be suggesting that higher prices will remain in place up to Monday the 12th midday, and then after that, a contraction may follow as well. Projections are saying 19.72, 20.50, 21.76, and momentum is expected to remain strong as well up till the 13th of January. Okay, yeah. So see what you make of AEHR, and thank you very much for watching this video.